Hey, good afternoon. This is Bob from Trade Genius. It's the 10th of August, and all I want to say is that um, I think this the fake 18-month central bank induced levitation machine is now breaking down, and now what we have to look for is to actually get strategic some lower lows. But a couple things happened here, and I'm just going to show you the Nasdaq because that's what they lifted the most. And so starting in right after July 4th weekend, going into the second quarter earnings, they lifted the market, and they lifted it, and they lifted it, and they lifted it, and they lifted it, and oh, excuse me, sorry. And they just drove this thing up to new highs, and we have every metric known to man has been broken in this move. Records in terms of days without 1% losses, days without 5% losses, absolute short interest on the volatility, one thing after the other, and it was absolutely induced. You know, this wasn't a natural market. It was players that had unfair advantage in terms of the capital they could bring into the market. They're non-economic players, and they were driving the VIX down in order to prop up the markets. And the only thing I can really think about is that it's a scorecard of sorts of the political class. You know, the people be quiet if they think they're making more and more money in the stock market every day. And other than that, I don't know why they really should care. I think if they were really savvy, they would want corrections to let some of the heat off. Now they're going to probably get a full-on market crash again. And this time they're going to be the one blamed. Because Trump, as you can see it, he has no problem shifting blame to where he thinks it goes. Whether you agree with it or not, he's not afraid. I mean, today called out Mitch McConnell. He's calling out the president of North Korea. And so I think the Fed has put themselves into a crazy box here. And if you look at here, I had a chart that was showing the range down to basically 58.45 area, and it bounced in this all these days, and then yesterday it had the most bizarre close, just ramped it straight up, and you know, it looked so fake. It was just disgusting. And as soon as the Japanese market opened, the Asian market opened, we started selling. In fact, even a little bit before then, and then it was just a good place to go short and basically stay short as much as you can, and you weren't disappointed. And it cut right through that 45 area, and then it started just cutting through other fib lines. And this, I redrew the fib line now to show the high from the low here, and it blew through the 23, it blew through the 38, and it went almost touched the 50. And my thinking is, I think tomorrow is going to probably be a bad day for the market, because people are right now telling their money managers, hey, well, you know what, take some off the table for me. T. Rowe Price, I told you guys yesterday, said, hey, we're reducing equity exposure. So that's more retail that's not going to be involved here. Volatility is moving up, so that's going to be a problem for people. And so you're going to have, I think, a general sell-off, and also margin calls now for everybody who's short volatility, who followed these big players in. They got to get out, and I'll show that to you in a second. And then, so I'm thinking, my total guess, tomorrow down, Monday down, and I think we'll probably have sold this whole thing off, and then we can then take a see what's going to happen into OPEX. You got to realize too, there's a whole plethora of people who've been selling puts underneath these positions, because they can say, well, you can always buy it lower. But you know, when you see some of the stocks here, they may be down 5 or 10%. People weren't bargaining for that, trying to pick up $100, $200, $300, and they find themselves down now $6,000, $7,000 on a trade. Is that'll cure people from doing that, and that's going to put a lid on, I think, any kind of growth that may come from this, if we get any at all. It's going to be a lot more muted because people are going to be a little bit more afraid. So I just wanted to show that to you, and it wasn't the only thing that had a crazy move. It did extremely well with NASDAQ, but I've been playing for this short for a while, so I've been day trading it, but I've also been swing short, and finally got my validation today. What I mostly just day trade is oil, and I just took one trade today because I was so focused on the NASDAQ, but this also pushed up to here and basically double topped, and now we got this candle down, and now everybody's watching. It closed at 48.47, 48 here. This is bad news. So now the next area of looking at it can get down to here, and we have UCO puts and we have USO puts, and then obviously I jump in the market to short this thing too, and so it's something to be aware of. And as oil goes, and they whacked agriculture today, the USDA report, what a hit job on it. So if you're a guy that likes to buy those dips, it looks like they way overestimating soybeans, because they're really calling for a benign crop, and 58% of the soybeans are grown where there's a drought condition right now, so it's not going to get the lift. It's just typical. It's just like the gold report, like the unemployment reports. It's all so fake. And one thing I'll tell you, with this whole new cryptocurrency / blockchain that's going on now, is that in a couple years these reports are going to be irrelevant, because you're going to be able to tag all this data and be able to put it into reports that's going to go peer to peer, and people are going to be able to lift everybody's data points, and they can see for themselves how the soybean crops are doing, how the corn crops are doing, and be able to trust the information that was in there, and you're not going to need these reports. And so, like I told everybody that listens to me, is that government reports are designed to benefit those in power. The gold reports are designed for the banks. The unemployment reports are designed for the bankers too, and the USDA is designed for the people who are the big middlemen, big food brokers, and they just squeeze the farmer because he doesn't have the wherewithal to withstand this crushing. Now people are going to panic that have their crop in the ground. They're like, oh my gosh, it's going to go even lower, and so they'll puke up their crop, and then you're going to see in a couple days or a week, all this stuff's going to lift again. But those guys got all this stuff on the cheap. They did this with the farmers in the 1870s. That's where the Wizard of Oz came from. They did it with where the bankers would always be screwing, the bankers and the middlemen out of Chicago would always be screwing with the farmers, and that's where that whole fictional tale came from. So anyway, as an aside, but look at this. This is amazing. And then the one that people should get most excited about is gold. And gold is breaking out now. It's some resistance here, and I took some profit in AG today, but we still have SILJ, and I still have my big WPM position, and I'm not going to sell that one. I'm just going to sell calls. I got 20 calls against it for tomorrow. I hope tomorrow's like today with it. Doesn't do much, so I can get full cash out on that, and then I'll roll my calls into the next week. But anyway, this is the beneficiary, because they've been suppressing gold and silver as part of their manipulation to get the stock prices up. So now we're going to get a reverb on this stuff. So anyway, I got a few minutes left here. I got to actually run my daughter to a volleyball camp, and then I'm doing a video tonight of live webinar at 4:30 to talk about how to day trade futures, and also how to use the day trading money machine as part of that. And so if you're interested, just come on, and it'll be available if you don't get it. And if this doesn't go out before the webinar, you'll be able to access it live after the fact. But just look at the things here. I'll do by change of percentage here. Here, look at this. So I was worried about XIV. Now XIV could keep falling. If this vol keeps going, then XIV could get crushed. But we're not sure we're going to be in that situation yet. We'll see what happens. I don't think this is going to be the big move. I think the big move is going to come on it. But and still, I mean, that's a pretty tough looking candle. I mean, it's fallen $20 in 2 days. Okay, you know, over 25%. That's why I was staying away from this. This thing's fall 80%, and then you can buy XIV and go away for a year. So, and then let's see here. Let me go pull UVXY, because I did buy UVXY puts. I bought a spread on it just in case you get a big reversal, you get an intervention. Wow, look at that, they popped this thing up to 43.50 now. Wow, yikes, amazing. Look at that. So how about all those people short vol? They're getting their asses handed to them. And so I have 37.35s on it, and I took off some on the short leg as it moved up, and then I'll just manage it. I have till next Friday for the trade, so I'm not too worried about it. But if I'm wrong, I'll just push this out 2 weeks. These UVXY fevers last at the most 2 weeks, and I'll roll it out. But I'm short so much stuff that if I lose on this trade, I really don't care, because it's when this thing comes back down, it's also a sight to behold. You know, you can make $4,000, $5,000, $6,000, $7,000 on a $1,000 to $2,000 bet when this thing rolls out. And I'll close the rest of my short leg off on it like on Monday or Tuesday if we're down on Friday. So just FYI. And if you're not in it, probably you know, going into probably sometime on Monday to buy it for the following Friday would be probably a good bet, because I think we're going to sell off hard, and it's just going to provide tremendous opportunity. But you need to be short something, okay? And so the only thing that right now I have on a recommendation short is FAZ, because I think the banks are toast. We got out of AG, and we got stopped out of pretty much everything else, and now we're just going to ride this thing and look for some opportunities. Probably won't take on any new trades tomorrow, but on Monday I'll be looking for opportunities. But anyways, Bob from Trade Genius, finally some validation. It's good news, bad news. If you're long the market, I've been begging you guys, because I think this is going to be the beginning. We're going to get some snapbacks, but I think it's gonna be a pretty nasty rest of the year, because realization has taken hold now. Anyway, I'll catch you guys later. Have a good one. Thanks. Bye.